Welcome to the Henry Show. Today I'm going to talk about a investment idea or strategy that I've recently been thinking about and looking. Actually, made my first investment based on this strategy, and the strategy is looking at SEC Form 4 filings, which are the insider buys and sells of companies. So if you're a large enough, well compensated enough employee, high level enough employee of a publicly traded company, the SEC obligates you to report any buying and selling, and it's essentially public information how many shares are held by all the major leaders of a company. And there's this saying that I've heard for many years is there's many reasons that people, insiders, will sell stocks. So it's not necessarily an indicator if you see a large sale from a bunch of insiders. They might just like money. And nothing wrong with that. We all do. After all, this is the not rich yet channel. We're all trying to get rich. But there's very few reasons that an insider will buy. And I found this really cool screener. It's called gurufocus.com. It's the insider trading tracker. So it helps you filter this. So I've set this up for the USA and just filtered on only buys, only transaction type buying, and at least $1 million. And pretty interesting to look through here. You can see there's actually a ton of data and a ton of interesting companies. So something I noticed here, one that stood out to me was Mastercraft, which is a name I recognize because I do have an enjoyment of nice boats. So Mastercraft is a boat, wake surfing, boating company, and they are something that jumped out to me. So I noticed that this Coliseum Capital Management, which is a 10% owner, is reporting a lot of buying activity. So you can see it here and also down here. So multiple buys. And that kind of prompts me to check it out. Now, I had to remind myself, what is Mastercraft? And you go to their website and you go, these are some beautiful boats. I mean, this is really just the dream. They're selling a dream to people. A $200,000 fully loaded, very sexy dream. And I think as a product, it's hard to fault it, right? Now, they are going to be subject to economic conditions, but I mean, these are amazing products, right? Very, very beautifully made boats. Who anyone would probably be very jealous if they knew someone who had one of these. So, I mean, I want one of these. They're so beautiful. So, okay, as a stock, first thing I'm looking at is, do I understand the product? Goes back to the mad money strategy, right? I'm not putting a lot of money into individual stocks, but the ones I do, I want to be highly convicted of. And when I look at these boats, I go, I want one. And I think a lot of other people have that reaction. So it's really going to come down to price and economic conditions when you think about the success of this company, because it's not about the products. They've got great products. And so I was curious, well, let's look at the chart. Taking a look at Mastercraft Boat Holdings here, it's only a $350 million company. So it's an incredibly small company, but it's been public for almost 10 years. And you can see it hasn't done a lot. No dividend and pretty much trading sideways. So not really what you want to see, but it has had its ups and its downs. And right now it's in a down. So I guess that's why the VCs are interested. It's got a 9 PE ratio. So it's taken a big hit. I mean, I can understand. It does look like there's an uptrend here, except for COVID took them out. And then recently, probably some slowing growth and guidance took them out. But you could, if you squint, imagine that there's a uptrend here, and maybe this is a $30 a share stock. If you think about that being, if we look at the statistics, we can kind of get a sense of what its PE was at different times. Now, they've had very low PEs historically the whole time, so to expect this thing to jump up to like 15, 20 PE might not be reasonable. But let's see their revenue. So I'm walking through the process of how I scan a stock. I'm looking at the basics of the chart and the PE and the high level statistics. and how those trend over time. And then I'm looking at the financials and mainly top line. We see a lot of top line growth, but exactly what I expected. We're seeing a slowdown. And I've seen a lot of stocks like this. I think the home builders, you're starting to see this, and you're starting to see this in, I guess, these luxury consumer goods. In the last few quarters, it seems like people are tightening their belt. I think not a lot of people are interested in taking a 8% loan on a $200,000 boat, so I don't blame them. Nice boats, but maybe just not the thing that makes the cut for people's budget these days. And so yeah, this is definitely declining. You can see they had some really good earnings, and then those have really dropped off. So that 8 PE won't stick around. It would be closer to 16 here, right? If you maybe even 20, because if you just annualize this and assume it stays flat, hopefully flattens out. That's only 80 cents a year. And so they're in for a significant decrease in earnings if things don't pick up again. And I don't know, hard to say if it will. I think we need to see rates come down for this company to pop off. So this is one where, look, the insider trading tracker isn't perfect, but I am going to show you the stock I did buy, but Mastercraft wasn't one of them. Mastercraft was just kind of showing you the process here of looking at things that are interesting and taking a look at their stock, their products, and their financials. Ultimately, I made the decision to not buy Mastercraft yet. I think it could be an interesting thing to look at if interest rates decline, right? Like, let's say you could go buy a boat and get a 3% loan from the bank. Maybe you consider it. So I think these guys are going to be probably seeing flat or declining revenue in the next 3 to 6 months. There's really no reason to pick this stock up. And even at a 9 PE, it's not cheap enough when you see that they're only going to make 80 cents, not $2.20 if things just stayed flat with where they were in the last quarter. But there was another stock in here, which I found very interesting, and that is TKO Holdings Group. So guess what products TKO has? Well, the UFC and WWE wrestling. Now, I'm not a wrestling fan by any means. I'm not really even a big UFC guy, but I definitely recognize what a unique and interesting product and hard to replicate product that they have for both those entertainment franchises. And in particular, the UFC, I think just a lot of people are drawn to the violence of it, and they want to see some guy kick some other guy's ass, and people can't take their eyes off it. So the demand is there. And the other thing about the UFC is that they get away with charging really, really premium prices. They're not afraid to charge you, $100 for the most in-demand pay-per-view that they're going to put on that year. I mean, I don't know. I never paid for it, but I know a lot of people do, and they'd all bring their friends over, and it'd be a big event. So, yeah, TKO has a super strong product and super strong product demand. And I think this insider, that alone is not enough to buy the stock, but you're putting a bunch of things together. The second thing is this insider buys. Look at this. The CEO and another guy who's also a major owner both put in $150 million of their own money to buy this stock. And I actually figured out what happened here is if you take it onto all, but we're still filtered on TKO, you can see Vince McMahon, who a lot of people, I grew up, all the kids in elementary school, I think, were into wrestling and The Rock and Vince McMahon. I remember him, and I guess he's still at it. He's the founder of this whole damn thing, I guess, and looks like he's trying to get out. So he's got, and he's old. He's been doing this a long time. I get it. Who wouldn't want to cash in $400 million and go live in Hawaii? I mean, kudos to Vince McMahon, right? So he looks like what happened though is he started to sell probably in the open market, and then selling $400 million of any stock is going to start sending the price down. So he was probably looking for a block transaction, right? And he looked at the other owners and he said, hey, can you buy me out? And so you can see here, they came in a month later at a significantly higher price, by the way, because look, you don't sell 400 million without tanking the stock. Like I said, they came in at a significantly higher price, and they bought him out for exactly the shares that he sold, right? So, or not exactly, but pretty much almost all the share, right? So they've combined, they put in just shy of 300 million, and Vince McMahon, the day after, reported selling 300 million. So they basically just did a trade, I believe, because they filed all on the same day. And I'm not sure why there's a day apart here, but I really think these are essentially a block transaction. And this speaks such volumes to the CEO and this Patrick Whitesell's guy's confidence in the company. They're insiders. They have a direct line of sight into everything that's going to happen. This guy's the freaking CEO, and he's buying 150 million of his own money, putting it into this publicly traded company. This guy is a Super Bowl. He's a Mega Bowl. Ariel Emanuel. And at $89, it looks like they were right, because today it's trading at, after hours, 108.87. It had a little dip in the intraday here, but it was 108 for most of the day. And this is something I actually bought. Now you take a look at the chart here. I ended up buying it for essentially $98 right before it got over 100. So I've owned this for 2 weeks now, I guess. Maybe I bought it here about a week, and I've seen it continue on this nice uptrend that it's had for the last 3 months, up from the 80s. Now you got to imagine, can we see Vince tanking the stock? I'm not sure. Looks like it was here, right? He started to file that first time here, and this might have been Vince McMahon himself, because remember, 400 millions of sales on an $8.6 billion market cap is 5% of the entire company being sold right here. Kind of gives you an idea of how much power liquidity has. And then the bounce back, and this is the insiders buying, and it's been off to the races ever since. So if you look at their financials, I mean, it's good, it's great. Look, in just a period of a few years, they've nearly doubled their revenue. In the last 12 months now, since 2020, that revenue is more than doubled. So they're just printing money, and it's just, this is what you love to see, right? Going straight up. Revenue's going straight up. And their earnings are mixed, right? I don't think they seem all that profitable, but the revenue growth is just insane. And so people are going to look at this on a price sales multiple, right? It's going to stay around 5. Right now we're getting it slightly less. And it looks like the market cap's just trending with the revenue. You see this with like a lot of entertainment companies like Live Nation. They don't make money. And people say, oh my God, Ticketmaster and all these companies are just such money grubbing companies as a consumer, right? But surprisingly, you look at their stocks and they don't make money, but they can still go up just based on the revenue and the volume. And the other thing, actually, this is key. So I'm looking at this again, and I'd already forgotten. They recognized in the last quarter a $300 million charge out to the players. It's here in the operating expenses. So this is temporarily this quarter massively depressed, and they still only lost 100 million net income. They paid a $300 million fine. So there's, I guess, some dispute around the profit sharing with the players or some other crap like that, and some drama. They settled it. So that's not expected to recur, and they're going to get back to profitability, hopefully, or at least get back to not having massive losses. So this is actually the thing that lets me look past the earnings right now. Now, their earnings still aren't great, but it seems like it's a consistent revenue growth, and here and there they have earnings. I think it's possible for them to make money. They have a great gross revenue, right? I guess they have to spend a lot of time and expense on promotions, and probably spend a lot of money putting together those shows. But I guess there's multiple angles. There's always a bull case and a bear case, right? For me, I just wanted to have some fun. I wanted to find a stock with this insider buying strategy that looked good, and I looked through about 3 or 4, wrote them all down, and at the end of the day I decided this was the best one. So I put a small position. I think it was about $2,500, not crazy amount where if it goes down I'm sad, but if it goes up, I'm reasonably happy. It's just, can I get a little alpha? Can I get a small edge? I think this could deliver it, and I think it's an interesting test of the insider trading idea. So I kind of wrote this down. I kind of captured some notes about this, and again, this goes back to the process. I'm trying to write down everything I do, right? So I talk about it, and they just have, again, to recap, they have great franchises, and we've seen the insider buys. I think I did some sort of guesstimation based on revenue multiples and forward revenues, kind of came up with these price targets. So if you want to look at it since, what was their, if you just assume a consistent revenue multiple, what was the last time they were at $100 a share? They made $1.2 billion. Now, if you look in their investor guidance, they're going to look to make $2.6 billion this year. So on an equal revenue basis, you should see that multiple on the share price. So kind of an implied target of $208 a share here. That's one way of looking at it. That's an extreme bear case, an extreme bull case. But the other way is just looking at the forward revenue kind of against the trailing 12 months. So they've given guidance at 2.6 to the end of the year. They're already doing $2 billion now, and they're at $100 a share when I bought it. Well, just on the forward guidance alone and an even multiple, you're going to see, by the end of the year, their trailing 12-month revenue will be $2.6 billion. That revenue multiple the same, that kind of implies a 30%. It's a 30% growth in revenue. Kind of implies a 30% increase in the share price if you get that constant revenue multiple. So somewhere between $136 and $208 a share, I think is a fair bound, a fair range for the end of the year for this stock, which great. Again, I'm looking for a 15% minimum return for my mad money, and this is implying something closer to 30 or with some breakout to the upside. I think the stock can definitely double in the next 3 to 5 years, and it's all based on that revenue growth and constant revenue multiple. I think the worst risks are behind them. Certainly, they've managed to get through a lot of controversy, and as a live entertainment thing, get through COVID well, and then get through this settlement. I think it's very resilient, and they're good at making money. So I think they're going to continue to do that. The other thing I wanted to mention about these individual stocks is that I'm really looking for them to have a path to doubling. I think that needs to happen in some sort of 3 to 5 year window. So again, it goes back to the H.E.N.R.Y strategy. I'm looking to get into the long-term capital gain range, and I don't want to, sell and pay 50% in some short-term trade, 50% taxes on that. So it's got to double to make it worth my while, and I'm willing to hold for 3 to 5 years to achieve that. Now, will I need to hold this stock that long? Who knows? I mean, maybe I'll get $208 a share in a year, and I'll bounce out because I feel like it's tapped out and it's reached its full potential. But we're going to keep an eye on this one. So this is one of my first new Mad Money picks of May 2024. We'll keep an eye on it. Cheers.